Number one, you're not chasing, begging, or selling, or persuading anybody. You're teaching. That's the right mindset right there. Number two, there's no fear. There's no fear because you're not asking anybody for anything. You're leading with a servant's heart, right? And number three, you ain't going to raise no private money unless you are confident and convicted.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
All right, guys, we're back again with another great episode of PFREI, a passion for real estate investments. I'm your host, Fuquan Bilal. Oh, man, today we have Jay Conner. That's a ER, not an OR. Opposite. OR, not ER.
No, ER, not OR.
I said it right the first time. Okay, so this is Jay's second time being on the podcast. Jay's a friend of mine. I was telling him, we actually are both in a mastermind together. I met Jay maybe almost 5 years ago, 4 years ago for sure, 5 years ago, I think. And I think I was actually looking for tea, and it was a table full of coffee. You know, this mastermind, I mean, these guys just drink coffee. There's nobody drinks tea. So we struck up a conversation. I think Eddie Speed introduced us, and we became great friends then. And I had you on my podcast. I was on your podcast. His specialty is how to get the money, the private money. He's the private money specialist. He'll tell you all about it. Before we jump all into that, Jay, let's just give the guests a little bit of brief background on yourself, and then we'll get into it.
Absolutely, man. Thanks so much for having me come back on and talk about my most favorite subject that I'm the most passionate about, and that's being private money. Yeah, my wife, Carol Joy, and I, we are here in eastern North Carolina in a little teeny tiny town called Morehead City, North Carolina. And we started investing in single family houses back in 2003, full time. And so, yeah, I mean, we do about 30 single family houses a year. So not a big number, but our average profit now is $78,000 profit per deal that we do. I've got one going on right now that's actually got a profit of $150,000. But the first 6 years we were in the business, from 2003 to 2009, I relied on the local banks and mortgage companies to fund our deals. That's all I knew to do, was go to the bank. And, you know, the traditional way to borrow money is you get on your hands and knees and put your hand underneath your chin. You go, please fund my deal. Please fund my deal. But in this world, we're not asking for a mortgage. There's no application fees. We are actually offering a mortgage. Well, what happened in January of 2009, after being in the business for 6 years, I had 2 houses under contract. Profits was going to be over $100,000 combined. And I called up my banker. I'd been doing business with him for 6 years, done a bunch of deals with him. And I learned very quickly on the telephone that my line of credit had been shut down, didn't have any way to fund my deals, and that was with no notice. Well, I didn't know there was a global financial crisis going on until now. I got a crisis going on and can't get my deals funded. Well, my definition of coincidence is God's way of staying anonymous. And I learned about this world of private money in less than 2 weeks. I put my program together. I put on my teacher hat, and I started teaching people in my own network, people I go to church with, people in the Rotary Club, people in Business Networking International, my own connections. I started teaching them my private lending program as to how they could earn high rates of return safely and securely. And I raised $2,150,000 in less than 90 days. It was the biggest blessing in disguise. I mean, when I was told I had no funding, it was like, what am I going to do? Right. But it was the biggest blessing in disguise to be cut off from the bank. Our income actually tripled in the first 12 months of losing my line of credit. And the reason it tripled is I had access to all this private money. Today, we've got 47 private lenders that are loaning us money on our deals. That's individuals, human beings. Well, the reason our business tripled was because all those foreclosures were going on, like they are now again, but the banks weren't lending money, right? But I had all this private money available to me, so we were able to actually pick and choose the deals we want to do. And I tell you, since that month, since January 2009, I've never missed out on a deal because I didn't have the funding.
Yeah, I mean, it speaks in volumes about relationships, right? So you ran into a situation where you learned a new strategy that really turned out to be the best thing, right? So that was good that what happened because it allowed you to create those relationships and that you still have today. So it sounds like you have an operation where you said you have less than 60 investors, and these are repeat investors where you have enough capital to do the volume that you're doing, every year. So that's really great because they say your network is your net worth, or the amount of capital you can tap into. So, and being able to go full cycle where you buy, fix, and sell, and investors see it's full proof, then they spread the word. And of course, that's good for your reputation as well. So I want to talk about the challenges with raising capital, right? So I know you have the program. I know you say, hey guys, here's the process, here's the steps, Rotary Club, you go here, this is what you do, you have your package. But what do you see the challenges that people run into, especially just getting started to raise capital, right? What do they come to you? Yes, I went to the Rotary Club, I had breakfast, I talked to these people, what am I doing wrong? Give me 3 big challenges, if you can, that people have with raising capital.
Sure. The first big challenge that real estate investors have when they're first looking to raise capital is they got the wrong mindset. So here's the deal. Until you own the real estate between your ears, it's going to be hard to own real estate out there and raise money. And here's the correct mindset. Well, first, let's start with the wrong mindset. The wrong mindset is you're asking for money. You're asking for money. You ain't asking for no money. Did you know I've never asked anybody for money? I've never asked anybody to fund a deal for me. And they say, Jay, how have you got $8.5 million in private money that you circulate from deal to deal to deal? And you never ask anybody for money. How does that work? Here's the deal. I put on my teacher hat and I teach people what private money is. I teach them what self-directed IRAs are and how they can use not only their investment capital, but they can also use retirement funds that they can move over to a self-directed IRA company and, invest with my company. So I teach them what this is all about. Here's the deal. And this is a sub problem, a sub challenge. Instead of having, in addition to having the wrong mindset and asking, then there's a fear of rejection. They got the fear of rejection. Listen, you can't be rejected if you're not asking anybody for anything. There is no rejection. So let me play this out even further. So we separate the activity and the conversation of teaching the private lending program and how they can get involved. We separate that conversation from telling them about a deal that they could get involved in. If you tell somebody about a deal they could get involved in and you're first talking about private money, you're sounding desperate and you're begging and you don't even mean to. Because if you talk about the program and, hey, here's an opportunity, here's a deal you can get into right now, you sound like you're desperate. So first we teach the program, right? I don't have a deal that you could get involved in today, but I want you to understand the program. What's the interest rate I pay? How are you protected? How can you get your money back in, 90 days or less if you need it, right? What's the length of the note? Et cetera, et cetera, et cetera. It only takes about 20 minutes to have a conversation about how the program works. And then once they tell you, hey, I love the program. Yeah, I'd like to get involved. How do I get started? Well, they don't write you any check directly because we're not borrowing unsecured funds and they're not investing in a fund. I'm not pooling money in a fund. Everything we do is one-offs, like there's a single family house, there's a private lender or a couple of private lenders to get involved. So they tell me, what they got to work with. They tell me if they've got retirement funds that they want to use. I'll introduce them to my self-directed IRA representative, where I refer all my private lenders to. Now, once they're ready to go, I say, I'm going to put your money to work for you just as soon as possible. So within a week or two, I'll call them up. Believe it or not, we still have handsets here in North Carolina with cords attached. I mean, can you believe? Some people haven't even seen a handset, right? So I call them up, and here's the exact script. I say, I've got great news for you. I can now put your money to work. I've got a house in Newport. Notice I didn't give them the address. They could care less. I got a house in Newport with an after repaired value of $200,000. I didn't tell them the purchase price because they could care less. They want to know what's the after repaired value because I taught them that in the program. A house in Newport, after repaired value of $200,000. The funding required for the deal is $150,000. I know they got $150,000. They already told me. Closing is next Friday, so you'll need to have your funds wired to my real estate attorney by next Thursday. I'm going to have my attorney email you the wiring instructions. End of conversation. I didn't ask them if they wanted to fund the deal. That's the most stupid question in the world I could ask. Of course they want to fund the deal. They've been waiting on the phone call, particularly if they've already moved their retirement funds over to the self-directed IRA company, the third-party custodian. Well, they're not making any money until I call them and tell them, hey, I can now put your money to work. So it's very, very logical progression as to what conversation you have first, second, and third. So back to your question, what are the challenges and problems that people have? Number one, you're not chasing, begging, or selling, or persuading anybody. You're teaching. That's the right mindset right there. Number two, there's no fear. There's no fear because you're not asking anybody for anything. You're leading with a servant's heart, right? And number three, you ain't going to raise no private money unless you are confident and convicted. Convicted and confident and passionate about what you're talking about. If you don't believe in what you got going on, nobody else is going to either. Well, so how do you get that confidence, right? Well, let's say you're a brand new real estate investor and you never raised any private money. And your question in your head is, who in the world is going to loan me money? And I've never done a deal ever before in my life. Here's the answer to the question. If you don't pay your lender, the property does. Okay? If you don't pay, the property does. So, and of course, if you're looking to do your first deal, you better be working with somebody who knows what they're doing, as in a mentor or a coach, right? You better be working with somebody, right? And so, as I said, we're not borrowing unsecured funds, right? So how you gonna get that confidence to come across? You got to know the private lending program backwards and forwards. So if you want to go down to Smithfield's Fried Chicken and Barbecue after Sunday, go meet in church and have lunch, you can have a casual conversation over that fried chicken talking about private money. Another reason they fail is they don't know how to start a conversation. Well, my favorite way to start conversations is with did you know questions. I love did you know questions. You can just bring this question up anytime you want to, right? You're having coffee down at Starbucks and you're with a friend or whoever, and just in the conversation, look, did you know, hey, this is a writer downer right here. Did you know there's a way people can earn unlimited money per year tax-free? Let me repeat that. My favorite did you know question. Did you know there's a way people can earn unlimited money per year tax-free? Well, of course, they don't know the answer to that question. They don't know how that works. Well, the answer is when they say, no, I never heard of that. I say, well, my next question is follow up with a question. Have you ever heard of self-directed IRAs? Well, they ain't never heard of self-directed IRAs. So now when they say, no, what in the world is that? Well, now you can have a conversation about self-directed IRAs. And when you have a Roth IRA, you can now invest that money because that's after tax investment money. I said, look, I got one private lender that earned $72,000 from me last year, tax free, right? So you've led that conversation with curiosity and you're going to be telling them something they ain't never heard of. and you're going to see the aha moments and the light bulbs lighten up in their eyes and their head. So those are the main challenges. Know your program, be confident. You're not chasing or begging, right, or selling. You're teaching, you're leading with a servant's heart. And, you can't lose what you ain't got.
Got it. Hey, I want to make a pivot for a minute to where we are now in the marketplace. There's a lot of headwinds in the market. In fact, Q4, even I experienced the sentiment from investors being fearful, not knowing what's going on, interest rates increasing. How has those different dynamics affected, if at all, your business or the raising capital part? Because it was crickets for me in Q4. It was slow when I compare Q4 last year to Q4 the year before. And even some early parts of Q1 is just starting to turn around now, where investors are starting to gain some confidence in the market. How has that affected, if any,
It hasn't affected my business any. In fact, I've got more private money that's been referred to me in the last few months. And the reason that is that all my private lenders are taught. I don't do any business with private lenders that were already lending money out and already are familiar with how the game works. Everybody I'm doing business with, I am their trusted advisor.
Got it. Yeah. So you're educating them, having that transparency, keeping them abreast of what's happening, and that instills the confidence in them. And plus, as you mentioned, the deal is secured. You're saying, hey, do you have a mortgage or note? There's some equity cushion in there above what your loan is. You're insured. So if the house burns down, you get paid back. So you're going through all of that. So as long as there's still a buffer of what they're putting in versus what it's worth, and they're secured, then it's a win-win. So the single family house lending, in fact, I think that lending part of the business increased more when it started to slow down for other things, because most private investors started to take advantage of increased interest rates. Hey, we can get an extra point, we can get extra here, we can get there. So that's kind of what I didn't know if any of your investors came out asking for, hey, we feel like we should get more points or certain things. I did see that happening to a few other people that I know that pretty much borrow money on private lending. The lenders were like, hey, well, interest rates are higher, we got to charge a little more.
Yeah. Well, first of all, I don't pay any points. I don't pay any origination fees to my private lenders. It's a straight 8%. And you know what's interesting? I started paying my private lenders 8% in 2009. I haven't changed it since, with all the volatility and interest rates going up and coming down. And so I had one private lender last year. I had one private lender have that conversation with me. They said, Jay, interest rates are going up, quite a bit. Do you see the interest that you're going to pay us go up? And I say, and I reminded her, I said, well, I base on what I pay to my private lenders, compare that to what they can get in a 12-month certificate of deposit at the bank. And here's what's interesting. So, 3 years ago or less, the average interest rate annual, or the yield of a CD, 12-month CD, got all the way down to 0.17%. 0.17%. And I was talking with somebody earlier this week, and they had in their mind that the average now on a 12-month CD yield in the bank is between 4 and 5%.
I say that 4%. Yep.
Something cannot be further from the truth.
Yeah.
Google it yourself. I Googled it 48 hours ago. The average 12-month CD yield average in the nation is 1.37%.
Mm-hmm.
Now, where do you see these 4% and 5% banners? Let me tell you where you see them. You see them out in front of a credit union. Look at the small print. They're paying that on the first $25,000. What are they paying on everything above $25,000? 1%, 1.25%, right? So always read this, the fine print.
Yeah, and plus it's still higher than Treasury bonds. Some people I saw started to go into Treasury bonds. They feel as though it's more secure, more safe, but still the property itself is the security. So I get what you're saying. And it is always good to point out to investors, hey, if you were in the stock market, if you were doing this, this is what you would get compared to what we're doing. So,
well, that's another reason I got more private money chasing me, particularly over the last 2.5 years. The volatility of the stock market. They are sick and tired. And you talk about the word fear. They are fearful. And the older someone gets, the more fearful they become of the volatility and are afraid that they're not going to be able to outlive another correction, if you will. And of course, as we know, what's wonderful, particularly with our older private lenders, what they love is they know exactly what their rate of return is going to be. And they don't have to worry about the value of their investment, that principal loan amount or investment, as contrasted to the stock market. They don't have to worry about there any value decreasing or coming out of that.
Now, let's talk about term for what I mean. I see that the conversations, because I speak to investors all the time, and even myself as an investor, I'm looking at the sponsor syndicators or short-term deals, transactional funding deals where I can lend money for 90 days or for 6 months. Do you see that the term has changed? Is it a year, 2 years? Have investors said, hey, I want something with a little bit more liquidity, shorter term, because where the marketplace is at?
Well, because I give all my private lenders, except when they're loaning me retirement money. I don't do this with retirement money. But if it's just liquid investment capital, I give all of them a 90-day call option. If an emergency comes up, give me a 90-day notice. I'll replace, I'll have one of my other private lenders, buy your note, right? And so they know they've got an out all the time. But my terms, as far as the length of the note, hasn't changed since February 2009. If it's liquid capital, investment capital, it's a 2-year note. If it's retirement funds, it's a 5-year note. And most of the time I don't use it for that long on a property. Like the only time I would use it for longer is if I'm actually selling a property on rent to own or lease purchase. But in this crazy hot market, which it's still hot where we live here in Eastern North Carolina, I mean, I just put a house on the market this past Monday, 2 weeks ago. I do coming soon. Here's a little trick I do. My realtor puts it in the multiple listing service under coming soon. And then Friday it goes active. Well, the list price was only $230,000, right? And by Saturday, it went active on Friday. We had 14 showings, 14 showings on Friday. And then on Saturday, 4 written offers, 3 of the 4 above list price. So we're still in a crazy hot market. But anyway, that's my terms, 2 years or 5 years. And I don't ever pay principal and interest. It's either interest accrued or interest only payments.
That's awesome. Let's talk a little bit more about where people can get this book. You told me earlier on the show that you got a free book giveaway for the guests. What you got?
I'm telling you, brother. I'm telling you, I'm so excited about my book, Where to Get the Money Now. Where to Get the Money Now, subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. This is not an ebook. You can't download it. The only way you get it is I ship it to you, right? So at Amazon, it's $20. You can get the book for free, pay a couple of bucks to cover shipping and handling. And so you can get it at jayconner.com/book. That's jayconner.com/book to get on the fast track to getting all the private money you'd ever want and never miss out on a deal. And you know what's beautiful about it? Just duplicate my program in the book that I teach to potential private lenders. And guess what? You make the rules, not the lender.
That's awesome. I love it. Come to think of it, I met you long before 4 or 5 years ago. It was at No Expo.
Okay.
No Expo. I want to say it was around 2012 where I first see you do your private lending presentation, and I was blown away. And it was years since I saw you again, and I saw you at 5 years ago, actually, 4.5, 5 years ago, when I first joined CG, the collective. I was like, this is the guy that was speaking about the private money, and still here today.
Still going, man. Still going.
10 years later, 10, 11 years later. I love it.
You got it. You got it, man.
I'm sitting here thinking, like, I know I met him before 4 or 5 years ago. I saw him speak. Those were events where it was like 700 people in the room. So it's hard to really make that connection with people. But thanks for coming on the show, man. I really love it. The stuff we talked about. And thanks for giving away the free book to the guests. You guys make sure you go to the site, get that free book. Jay has a lot of great information, a lot of great tips to help you raise private money. So never ask for money, always fish instead of hunt. Fear rejection, be confident, stay confident in what you're doing, believe in what you're doing, because you can't raise money if you don't have that conviction and confidence and passion.
Yes.
So, those are some really great tips. I really appreciate it, man. Thanks for coming on the show. It's been a plum-pleasing pleasure.
I love it. Thank you so much, brother, and look forward to seeing you next week at the Mastermind.
Absolutely. All right, guys, another great episode of PFREI, a passion for real estate investments. I'm your host, Fuquan Bilal. If you're seeing this on Facebook, be sure to like and share this, and all the other social medias, be sure to like and subscribe. I really enjoy inviting these guests. I learned a lot. I got a page full of notes from this interview. Hopefully you guys enjoyed it as well. Tell a friend about the podcast. And thanks for coming on, Jay. I really appreciate it, man.
All right. God bless you.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.